All right, now let's go to the third component, which is the tax saving for depreciation. In this particular case, the D is the allowable annual depreciation. We've talked about that, and we're going to hit it again now, is that this isn't the true depreciation. This is just what your legislator put in the tax code. You know, if you buy a center pivot irrigation system, they will let you depreciate it for n number of years. Now for this class, we're going to use straight line depreciation. The text covers in greater detail, if you want to look it up in the index under depreciation, it's going to show you some of the year digits and the acres method and double declining balance. Okay, I'm not covering all the depreciation methods, so I am going to choose for this class the simplest way of doing depreciation, and it is the straight line. With the understanding that you go out there and in the real world and you have opportunities to depreciate out quicker your machinery, now knowing the time value of money, you may very well choose some of those ways of depreciating quicker. But for this class, to keep the numbers simpler so we can concentrate on the time value of money and capital budgeting, I'm going to use straight line. The definition for the allowable annual depreciation is your cost basis minus your terminal value for tax purposes divided by the depreciable life, and the depreciable life is that number that is provided by your tax code that is provided or given to you by the legislator. The cost basis is typically the cost of the equipment or purchase. However, if you're purchasing a new equipment and you're buying but you're selling or salvaging the other one, there might be a different tax basis. But for this class, I'm not going to get into the sophistication of the nuances of calculating depreciation. For this class, it's safe to say that cost basis is going to be the cost. What about the terminal value for tax purposes? Now, in this irrigation system, if you sell it in 3 years, the farmer's got an expectation of how much it's going to return. But what does your legislator allow you for the terminal value? The terminal value for tax purpose is 0. Okay? The government allows you to depreciate any depreciable asset to 0 over the depreciable life of that investment. And I'm telling you, for some of you that have been doing this in your farm management classes, where you're actually trying to get an approximation of the true depreciation, then that terminal value is your expected salvage value. But for tax purposes, it is 0. And I stress that because one or more of you are going to put the salvage value in that number. So start and make sure it's not you. So the depreciation then can be simplified by taking the cost basis, which in this class is going to be the price or the cost of that investment, and you're going to divide it by the depreciable life. In all cases, those two numbers are going to be given to you in the problems. So you pull those numbers out. In this particular case, the cost was $80,000. If you read the fine print, it says that the IRS allows this farmer to depreciate the irrigation system over 15 years. So that means that the government allows this farmer to reduce his taxable income by $5,333 a year in recognition that there'll be some depreciation of that center pivot irrigation system. If it reduces the taxable income, how much does it reduce the actual taxes that this farmer has to pay? The tax savings from this depreciation is the depreciation multiplied by the marginal tax rate. So in this particular case, where the farmer can reduce his taxable income by $5,333, that's going to mean it's going to be a reduction in the taxes that this farmer has to pay in the tune of $1,067. That means when that farmer sends his taxes to the IRS that year, the amount that he pays is going to be $1,067 less because he has been able to claim the depreciation of that irrigation system. That's what a tax deduction means. Let me also give you another flag. Every year, somebody in this class, one or more of you, in the homework or an exam, is going to forget this step. And when I ask for the tax savings from depreciation, they're going to put the depreciation. Once you find the depreciation, the cost minus the depreciable life, you are not done. You have to multiply that by the marginal tax rate. So I'm stressing it so you can mark it so you're not the one. Now we take those tax savings and we have it, and we're going to get that for the 3 years.